Back to Power Lunch, everybody. Stocks selling off today. We are near session lows, down almost 700 points. The S&P 500, it's down 2%. All 11 sectors in the S&P 500 are lower as it declines back below 4,000. Energy holding up despite another big drop in natural gas prices. Joining us now with more, Pippa Stevens. What's happening in nat gas?
More on that in 1 second, but starting first with oil, which is trading a little bit lower in a pretty tight range ahead of tomorrow's Fed minutes release. The WTI contract for March delivery does expire today, so we're seeing a little bit more activity in April, which is trading at a bit of a premium. But nat gas is the big mover, down more than 8% and falling to the lowest since September 2020, and really in danger within falling below that $2 level. Now, we've talked about how this is because of the Freeport facility being offline. That's about 2% of U.S. demand, as well as the weather. Now, drilling down on that weather point, as this chart from Bank of America shows, you can see that demand this winter has been about 1.3 billion cubic feet below last year, and it is well below the 5-year average. And so that means that the situation in storage has swung from a 300 billion cubic feet deficit at the end of last year to now being about 9% more than the 5-year average. This comes as U.S. production hits record levels. All of that means this is an oversupplied market.
It is. I don't know if we have enough superlatives to talk about. Let's boil it down. So people in California in particular, because of some wonky factors there, are getting $800, $900, $1,000 heating bills this summer. I think they're getting a $50 rebate from the government to try to save this. I mean, the energy producers say relief is coming, but they must be going, why is Pippa telling me that the nat gas price is down 80% from the highs that I'm paying as much as a mortgage for? Maybe we just have to have these feed through with a lag. This has been an incredible about face here. Yeah,
and this is Henry Hub prices, and we have to remember that there are different types of markets based on your region. So to your point, in California, they've had some pipeline issues, they've had stalled production, and so as much as, even 2 weeks ago, their prices were 5 times higher than Henry Hub.
Wow.
So it really is a regional market based on the available infrastructure. So just looking at Henry Hub doesn't tell the whole story. But, I think one thing that's going to happen now to rebalance the situation is that producers are going to have to cut back. We heard that from EQT. They think the market's going to be oversupplied all year, and that 2024 is when things will start to rebalance.
And yet the equities have done okay. I mean, they're not a disaster. It's interesting. You would have thought, okay, well, if the price of the commodity is down 80%, the stock would be too, and that's not really the case.
I think one thing is that a lot of producers do hedge their levels, so they're probably hedged at this point at a much higher level, maybe more so around the $4 level. Also, longer term on the strip, you can see that in January of 2024, prices are above $4. So there is this bet that U.S. LNG, once we can ramp up that infrastructure, that will be a catalyst to push prices higher. But honestly, at this point, it's like, how low can you go? Yeah. Every day, it's a
What's been going on in Europe with natural gas?
Yeah, so they've also been saved by the weather. Their TTF futures fell below 50 euros per megawatt hour for the first time in 17 months last week. And so it's also a weather story there. And what's interesting is we might see some demand increase from switching back to nat gas. Nat gas is so expensive last year, so producers switched, or power companies switched from nat gas to coal. Will we see that trend reverse this year?